Hi all, welcome to my channel Satish Vlogs. In this video, I would be explaining illustration on financial statements. I request the viewers to watch this video till end because I would be explaining this video in a lengthy manner considering the phases of an accounting cycle. Okay, so with this note, let's move to the next slide of my PPT. In this slide, there is a diagram which depicts like a cycle. This is nothing but an accounting cycle. What is an accounting cycle? What are the various phases of an accounting cycle? What this each individual phase all about? Regarding all these details, I had already created a video which was already uploaded in my channel, and I would be providing the link for that video in the below box. Requesting the viewers to go through that video before getting into the details of the current video in order to better understand of the financial statements. Okay, so as part of the first phase, which is a business transaction, what this is all about, I would be giving some kind of high level overview in this video in order to better understanding of the financial statements. Okay, as a first step, which is a business transaction, normally in the business entity, a numerous transactions normally would happen, right? All those transactions we can consider them as a business transaction, and for all those business transactions, the journal entries would be created or made as part of the journalizing phase. Okay, once the journal entries are being made as part of the journalizing phase, for whatever the journal entries which are being made, for all those journal entries, ledger accounts are being created and the entries would be posted accordingly in the respective ledger accounts as part of the ledger posting phase. And once the ledger accounts are being created, the balances which are being updated are getting reflected in the ledger accounts would get updated as part of the trial balance phase. Okay, so the debits which are being updated under the debit side of the trial balance should matches up with the credits which are being updated or the totals under the credit side of the trial balance, because as we have been following double entry system of bookkeeping while making the journal entries, the debits should matches up with the amounts which are being shown under the credit side. Okay, there shouldn't be any discrepancy. And considering the trial balance or the balances which are being reflected as part of the trial balance, considering all those balances, we would prepare the financial statements. What are the critical elements of the financial statements? One is the income statement, followed by balance sheet. Okay, there are other statements like cash flow statement or okay comprehensive income statement or statement of equity. All those I would not be considering as part of my video. I would be explaining the critical statements which are income statement and the balance sheet. Okay, so with these details, now let's get into the financial statements. So I would be explaining the financial statements of RSK and Co, which means whatever the business transactions which are being entered by RSK and Co for a particular period, for all those business transactions, I would be making the journal entries. For the journal entries, I would be creating the ledger accounts, and for whatever the ledger balances which are being reflected as part of the ledger accounts, the same would be updated as part of the trial balance. Considering the balances which are being updated in the trial balance, the financial statements would be prepared. Okay, so I would be opening the financial statements of RSK and Co. So if you take a look in this slide, there is an Excel sheet which has been attached. Okay, I have shared all the details in this Excel sheet. Okay, I would be opening this Excel spreadsheet. So guys, if you take a look, I had already explained the phases of an accounting cycle in my previous video. Even in the Excel spreadsheet, I would be providing the diagram of a phases of an accounting cycle for the better understanding of the flow of the transactions. Okay. So as a first phase, which is a business transaction, this RSK and Co have entered into the multiple business transactions for the period 1st April 2024 to 30th of April 2024. So which means we would be preparing the income statement for the period 1st April 2024 to 30th of April 2024, and we would be preparing the balance sheet of RSK and Co as on 30th of April 2024. And below are the list of business transactions which are being entered by RSK and Co for the period 1st April 2024 to 30th of April 2024. So for better understanding of each individual business transaction, I would be providing the video number corresponding to each business transaction wherever it applies, which means based on the concept, okay, I would be providing the video number for which the videos were already been created and were already been posted in my channel. If you take a look for the first business transaction, which is XYZ Limited issued shares of 5 lakh in quantity at par with a face value of 1 each. This concept is primarily related to the issue of equity shares. And for this concept, I had already created the video, and the video number is 34. Okay, I request the viewers to go through that video before getting into the details of the current details on the financial statements in order to gain better understanding of the current financial statements. Okay, and if you move to the next second business transaction, which is bought inventory from A Limited worth 2 lakhs, which is due to be payable by 31st of July 2024. Okay, and there is a defective inventory of 10,000 which is returned back. So what are the concepts or topics which are being covered as part of the business transaction? One is, okay, this RSK and Co has bought some inventory from A Limited, and the amount the amount is due to be payable by 31st of July 2024. Okay. Now I would be preparing the financial statements for the period or as on 30th of April 2024. However, the amount is due to be payable by 31st of July 2024, which means there is a which means this RSK and Co had bought this inventory on credit basis because it is not due to be payable at the latest by 30th of April 2024. It is due to be payable by 31st of July 2024. So, which means this RSK and Co had bought this inventory on credit basis. And whatever the inventory which has been bought, a few of the units were returned back because of some defective. Okay, so there are primarily two concepts which are being covered as part of this business transaction. One is purchase of goods on credit basis, and the other one is purchase returns. Okay, so videos pertaining to these two concepts were already being shared in my channel, and the video numbers are video number 11 and video number 13. I request the viewers to go through those videos in order to gain better understanding of the current business transaction. Therein, I had already clearly provided what is a journal entry when the goods are purchased on credit or when the purchase returns were made. Okay, how those journal entries are supposed to be posted in the ledger accounts, how that those entries would get reflected in the trial balance, how those amounts would get reflected in the financial statements. All those details I had already shared in those respective videos. Okay, now let's move to the third business transaction, which is paid wages of 30,000 on last day of the reporting period. Okay, so this is primarily this RSK and Co had incurred some expenses related to the wages, and the same would get paid on the last day of the reporting period, which means this expense has been incurred in the current period, and also it would get paid in the same reporting period. So it primarily happens on the cash basis. Okay, so what is the concept which primarily applies for this business transaction? The concept is expense incurred, and the video related to the expense incurred I had already covered in my channel, and the video number is 37. I request the viewers to go through that video. Okay, now let's move to the fourth business transaction, which is paid salaries of 15,000 to administrative staff on last day of the reporting period. Okay, this is also something like expense incurred. Salaries are being paid to the administrative staff. Okay, so I request the viewers to go through that video which has been already shared in my channel. Now let's move to the fifth business transaction, which is office rent of 20,000 is payable to landlord by 5th of May. Okay, so for which period we would be preparing the income statement? Basically for the period 1st of April till 30th of April, and the balance sheet we would be preparing as on 30th of April. However, if you take a look, when the rent is paying by RSK to the landlord, the rent would get paid by 5th of the May. So for the current month, it is getting incurred. However, it would get paid latest by 5th of the May. So for the current month, there is a concept of accrued expense would get arises. Okay, because expense has been incurred, but which is yet to be paid in the following period. So for the current month accrual, there is a need to book an accrual for the office rent, and the entries are supposed to be shown accordingly in the financial statements. So regarding this concept, I had already shared video in my channel, and the video number is number 3. I request the viewers to go through that video. Now let's move to the sixth business transaction, which is bought machinery worth 1 lakh having an useful life of 10 years with a salvage value of 10,000. Okay, in the same way, an amount of 15,000 paid towards installation of machinery. Company adopts SLM, straight line method, to provide depreciation, and the same would be provided on monthly basis proportionately. So what is this business transaction all about? This RSK and Co had bought some machinery worth of 1 lakh, and the useful life of the machinery is 10 years, and the salvage value is 10,000. Okay, and also there is some installation expenses has been paid towards installing that machinery, and the amount which has been paid is 15,000. And for the purpose of depreciation, the company adopts straight line method to provide the depreciation in the books of the accounts. So primarily, what are the list of concepts which are being applicable for this business transaction? One is purchase of fixed asset or purchase of machinery, right? And the other one is providing of depreciation. So the videos pertaining to these two concepts were already being shared in my channel. I request the viewers to go through those videos in order to better understand of the financial statements. Okay. Now let's move to the seventh business transaction, which is electricity bill charges amounting to 5,000 payable by 10th of May. Okay. So for which period this RSK and Co would be preparing the financials for the period 1st of April 2024 to 30th of April 2024, and the balance sheet would get prepared, will be prepared as on 30th of April 2024. However, as per this business transaction, the electricity bills would get incurred for the month of April. However, this would get paid by 10th of May, which means the expense would get incurred, however, which is yet to be paid. So for the current month, the concept of accrued expense would get arises. So what is an accrued expense? What are the entries would get arise when the accrued expense would incurred? All those details I had already shared in my video on accrued expense. I request the viewers to go through that video in order to gain better understanding of the financial statements. Okay, and the video number is 3. Now let's move to the next point, or eighth numeric, which is a eighth business transaction, which is paid advertisement expenses of 7,000. This is something similar to the expense incurred. Okay, so ABC and Co had incurred some advertisement expenses towards promotion of its product. Okay, so the amount has been incurred and the same has been paid in the same reporting period, so which is similar to the expense incurred. We will see how the journal entries are supposed to, what would be the journal entries for these business transactions in the next phase of an accounting cycle, or in the next tab, which is a journalizing tab. Okay, now let's move to the next business transaction, which is a Roman number 8, which is paid 12,000 towards half yearly insurance expenses on the health of employees. Okay, so what this business transaction all about? This ABC, RSK and Co had incurred some insurance expense towards health of the employees. Okay, so normally, as everybody are aware, in order to see, for insurance expenses, the premiums are supposed to be paid in advance, then only the risk would cover for the future periods, right? So this 12,000 has been paid in advance on the health of the employees by RSK and Co. Okay, and this insurance is for the period which is a half yearly insurance, which means it covers for a period of 6 months. However, we would be providing or preparing the financial statements for 1 month, which is 1st April 2024 to 30th of April 2024. So there is a concept of prepaid expense would get arises. So what is a prepaid expense? What are the journal entries? All those details I had already covered in my earlier video on prepaid expense, and the video number is 9. Okay. Now let's move to the 10th business transaction, which is an amount of 50,000 deposited towards FD. FD is nothing but the fixed deposit. Okay. And the RSK and Co has been receiving a monthly interest of 6% per annum. So RSK and Co had made some investments in the nature of FD, fixed deposit, and on that investment or on that FD, fixed deposit, RSK and Co has been receiving a monthly interest of 6% per annum. So what are the concepts which would get applicable for this particular business transaction? One is purchase of investment, and the other one is interest or dividend income on the FD. So the details for these two concepts were already been shared in my channel I request the viewers to go through those videos, and the video numbers are video number 36 and the video number is video number 18. Now let's move to the last business transaction, which is sales of 5 lakhs made to customers on 15th of April 2024, which is expected to be received by end of the month. 15,000 of finished goods are expected towards returns. Bad debts are expected to be 3% on net sales. Okay. So this is primarily related to the sales which are being made by RSK and Co to its customers. How much worth of sales has been made? 5 lakhs worth of sales has been made to its customers on 15th of April 2024, and the amount for that sales is expected to be received by end of the month, which means the sale has been made and the amount would be received by end of the month. Even though there is a concept of credit sales would get involved, but still by end of the month the company would end up in receiving the cash or bank from its customers, right? When the sales are being made, normally the sales would be made on credit basis. Eventually the company would receive the money from its customers in the same reporting period. Okay. And also amount of 15,000 worth of finished goods are expected to be returned by the customers, which is nothing but the sales returns. Okay. And also there is a bad debts are expected to be 3% on the net sales, which is nothing but the bad debts. So what are the concepts which are being involved related to this particular business transaction? One is sale of goods on credit, sales returns, and the bad debts. Guys, I request the viewers to go through all these videos in order to gain better understanding of this particular illustration. I am sure that it is going to be much more helpful who wanted to understand how the financial statements works from inception till to the end. Okay, how the journal entries would get captured, how those journal entries would get reflected in the financial statements. All these details would be covered as part of this illustration. Now we are done with the first phase of the business transaction, which is first phase of an accounting cycle, which is a business transaction. Now we will move to the next phase of an accounting cycle, which is a journalizing phase. Okay guys, as I had already explained, I would be considering the phases of an accounting cycle to explain my each individual business transaction. Okay, now as part of the next phase, which is my journalizing phase, let's move to the journalizing tab. Okay, so what is my first business transaction? This is my first business transaction. Okay, and for this business transaction I would be explaining what are the journal entries for this business transaction, what are the ledger accounts are supposed to be created or opened, and how these journal entries are supposed to be posted in those ledger accounts, and how the balances for these ledger accounts would get reflected in the trial balance, and how those amounts would get reflected in the financial statements. I would be explaining for each individual business transaction. Okay. Now my first business transaction is XYZ Limited issued shares of 5 lakhs in quantity at par with a face value of 1 rupee each. So what does it mean? Company had issued some shares to the outside public to raise the finance, which means in the form of the equity. So what is the face value of each individual share? 1 rupee. Okay. And how much of the quantity that XY, the RSK company, RSK and Co had issued? 5 lakhs in quantity. Okay, so RSK and Co would be receiving that amount from the outside public in terms of bank. So the bank account is supposed to be debited, right? And the credit is required to be given to equity share capital account, right? So my entry would be bank account data to equity share capital account. Okay. So the entry would be bank account data to equity share capital account. We have to update the narration, right? So being equity shares of 5 lakh in quantity issued at face value of 1 per share. Now we need to understand what are the ledger accounts are supposed to be created and how these journal entries are required to be posted in the respective ledger accounts as part of the third phase. Now let's move to the next phase of an accounting cycle, which is the ledger posting phase. So we need to create bank account and we need to create the ledger account for the bank account and the ledger account for the equity share capital account, and the entries are required to be updated accordingly in these two accounts. So let's move to the ledger postings phase or tab. Now where is my bank account? This is my bank account. Okay, so if you take a look here, I have already created linking of all these cells to the underlying tabs. So once the entries are being updated or created in generalizing tab, the amounts would get reflected or updated in the rest of the tabs. There is no need of the manual intervention is required. Okay. So we have created the bank account, and in the bank account we have made the entry of 2 equity share capital account. And what about this equity share capital account? So we have created the equity share capital account and we have updated that entry of by bank account, okay, of an amount of 5 lakh. Now let's see how these amounts would get reflected in the trial balance. See, bank account is got updated with an amount of 5 lakhs, and my equity share capital account got updated with an amount of 5 lakhs. As everybody are aware, equity share capital account normally shows with a credit balance. See, as mentioned, I had already shared videos on equity share capital account or issue of equity shares. I request the viewers to go through those videos so that that would be very helpful in terms of understanding the journal entries, the concept of the equity shares, how it is supposed to be shown or it would get reflected in the financial statements. All those details I had already shared in my video on issue of equity shares. And also let's move to the last phase of an accounting cycle, which is a financial statement phase. What are the critical elements of the financial statement? One is the income statement and the other one is the balance sheet. Now let's see how these accounts would get reflected in the financial statements. See, this equity share capital is getting reflected under liabilities side, and my bank account is getting reflected under the asset side. Under asset side, under current assets under the asset side. See, if you take a look here, my balance sheet is getting matches up. There is no discrepancy between assets and liabilities. Is getting matches up. Okay. Now we are done with the first business transaction. Now let's move to the next business transaction. What is my second business transaction? Bought inventory from A Limited worth 22 lakhs, which is due to be payable by 31st of July 2024. There is a defective inventory of 10,000 which is returned back. So in this business transaction primarily involves two concepts. One is purchase of goods on credit basis and the other one is the purchase returns. So my first entry would be purchase of goods on credit basis. I request the viewers to go through those respective videos, then only viewers would be able to understand what are the journal entries are supposed to be created when the purchases are made on credit basis. Okay, I have already made the entry over here. The entry would be purchase account added to sundry creditors account. Okay, the value would be 2 lakhs. Okay, now we will see how this. So now we will see what are the ledger accounts are supposed to be created as part of the third phase, how those amounts would get reflected in the trial balance, and how the amounts are required to be updated from the trial balance into the financial statements. So all these details we will see eventually. Okay, for this particular business transaction. There is one more piece of the business transaction as part of this transaction, which is a defective inventory. We will take a look later on. First, we will finish off the first part of this particular business transaction. Okay. Now, what is my ledger posting? One, what is the first account which I am supposed to be created as part of the ledger posting? One is the purchase account and the other one is the sundry creditors account. Now, let's move to the next phase of an accounting cycle, which is my ledgers postings phase. Okay, so I have created the purchase account over here and I have already made what is the entry? Purchase account added to sundry creditors account. So two sundry creditors I have posted over here. Okay, and I have created the sundry creditors account and wherein I have made the entry as buy purchases. Okay, so I will explain you what this balance carried down in each and every account at the end of this once I am done with the business transactions. Okay, now we will see how these amounts are supposed to get reflected in the trial balance. See, the purchases normally show as the debit balance. So we have been showing the purchases under the debit side in the trial balance, and the amount is getting reflected against the sundry creditors under the credit side in the trial balance. The trial balance getting matches up because as we have been following double entry system of bookkeeping, there shouldn't be any discrepancy. Now, considering these balances, we should take those balances and are required to be updated in the financial statement. Now, let's move to the last phase of an accounting cycle, which is a financial statement phase. We will see how this particular business transaction is supposed to get reflected in the financial statement. Right. These purchases would get reflected under the expense side in the income statement, and the sundry creditors are required to be updated or should get reflected under the current assets in the liability side of the balance sheet. If you take a look here, my balance sheet would get matches up. Okay, If you take a look here, my balance sheet should get matches up. There shouldn't be any discrepancy. My trial balance and my balance sheet should get matches up. There shouldn't be any discrepancy. So if you take a look here, my trial balance is getting matches up. There is no discrepancy between debits and credits, because as we have been following double entry system of bookkeeping, and even my balance sheet is getting matches up. There is no discrepancy between assets and liabilities. The totals which are being shown under the asset side is getting matches up. Is getting matches up with the amounts which are being shown under the credit side or under the asset liability side of the balance sheet. Okay. Now let's move to the third business transaction. No, we are left with the second piece of the second business transaction, which is there is a defective inventory of 10,000 which is returned back, which means there is a purchase returns are there. We will see what are the journal entries, how those for what are the ledger accounts are supposed to be created for this purchase returns, and how those amounts should get reflected in the trial balance eventually in the financial statements. Okay. Now go to 16th row. So when the purchases are made, we have debited the purchase accounts. When the returns are made, we should give credit to the purchases, and we should reduce our sundry creditors to that extent because the goods are being returned. How much worth of goods has been returned? 10,000. So if you take a look here, being inventory returned back due to defective stock. Okay. So now we'll see what are the accounts, ledger accounts are supposed to be created, and how these entries are supposed to be posted in the respective journal entries as part of the ledger accounts, as part of the third phase of an accounting cycle. Now let's go to the ledger postings phase. So what are the ledger accounts are supposed to be created? One is a sundry creditors and the other one is a purchase account. See, if you remember in our previous entry, we have already created these two ledger accounts. So we would be posting these entries in the respective ledger accounts. There is no need to create the ledger account separately because these accounts were already exist. Now one is the purchase account and the other one is the sundry creditors account. So we would be reducing our purchases to the extent of 10K. And we would be reducing our sundry creditors. Sundry creditors normally show credit balance as the goods are being returned. So we need to adjust our creditors or reduce to the extent of the returns which are being made. Okay, so we will be reducing our sundry creditors to the extent of 10K. Okay, hope this is clear. Now let's move to the trial balance phase and see how these balances should get reflected in the trial balance. Okay, see, normally we would be taking the balances from the ledger accounts and the same would be updated in the trial balance. So if you take a look here, for the purchases account, what is the balance which is getting reflected over here? 1,90,000. And for the sundry creditors, what is the balance which is getting reflected over here? 1,90,000. So we need to update these balances accordingly against the respective accounts in the trial balance. So 1,90,000 we have updated against purchases and 1,90,000 we have updated against sundry creditors. The trial balance should get matches up. There shouldn't be any discrepancy or difference between debits and credits as we have been following double entry system of bookkeeping. And let's move to the financial statement. The purchases would get adjusted to the extent of the returns. Okay, so it got reduced to the extent of 10K. Now we have been showing the net purchase of 1,90,000. Even similarly, the sundry creditors got adjusted to the extent of 10K and we have been showing 1,90,000 against sundry creditors. So there shouldn't be any discrepancy between assets and liabilities. The balances should get matches up. Okay. Hope this is clear. Now let's move to the next business transaction. Paid wages of 30,000 on last day of the reporting period. Okay, now let's move to the fourth business transaction, which is paid wages of 30,000 on last day of the month. Okay, so which means the wages are being incurred and paid in the same reporting period. Okay, so the entry would be wages. As mentioned, this is something related to the direct expense which is paid in bank, paid through bank. So regarding this one, I had already shared the video. Request the viewers to go through that video which I had shared in my earlier videos. And regarding this one, I had already shared the video number as well. So the narration would be being wages paid to labor. Okay. So for this transaction, I would be explaining. Let's move to the fourth phase, third phase of an accounting cycle, which is the ledger creation phase. In that one, I would be showing you what are the ledger accounts are supposed to be created and how these journal entries are required to be posted in those respective ledger accounts. Okay. So what are the ledger accounts which we are supposed to be created? One is the wages account and the other one is the bank account. See, regarding this bank account, we have already created this bank account because there were a couple of transactions which are already been transacted. So bank account, we have already created the bank account. So now let's move to the ledger postings phase cycle. See, so there is an outflow of the cash. So the bank account is supposed to be reduced to the extent of 30,000. So due to that reason, we are creating our bank account. And see, this wages account being an expense account. So we are debiting the wages account to bank account. Okay. So now let's move to the trail balance. So what is this trail balance all about? Whatever the balances which are getting reflected in the ledger postings or ledger accounts are supposed to be taken from the respective ledger accounts and required to be updated in the trail balance. So, so the balance for the bank and the balance against the wages are required to be updated in the trail balance. Now, see, the balance against the wages is 30,000 and the balance against the bank, this 30,000 is got adjusted against the existing balance. So the net balance would be 4,70,000. Now let's move to the, see, the trial balance would get matches up because as we have been following double entry system of bookkeeping, the debits which are shown under the debit side should matches up with the debits which are shown under the credit side. There will not be any discrepancy between debits and credits. Now let's move to the financial statement phase, last phase. So and see how this particular transaction is supposed to be reflected in the financial statement, which are income statement and the bank and the balance sheet. Wages being an expense, so it should get debited directly. So these balances will directly take from the trial balance and required to be updated in the income statement under the expense side. Okay, and this bank account would get reported or reflected under current assets in the asset side. The balance sheet would get matches up. There will not be any discrepancy between assets. The total values which are shown, total balances which are shown under the asset side should matches up with the total balance which is being shown under the liability side. Because as we have been following double entry system of bookkeeping, there shouldn't be any discrepancy. Now with this, let's move to the next business transaction. What is the next business transaction? Paid salaries of 15,000 to administrative staff on last day of the reporting period, which means the administrative expenses or salaries are being incurred in the current period, which are being paid in the current period. Okay, so this which is like an expense. Regarding this one, I had already shared video in my earlier videos, and which is currently available in my channel. I request the viewers to go through that video to understand how this journal entry would get created when the expense gets incurred. So how much amount of salaries that does this RSK and Co had paid? 15,000, right? The entry would be salary account data to bank account, because there will be an outflow of cash, so the bank account is required to be credited, and as a salary is being an expense account, as per golden rule of nominal account, all expenses and losses are required to be debited. Okay, now let's move to the third phase of an accounting cycle and try to understand how these salaries are required to be, what are the, that is what are the ledger accounts are required to be created for this particular journal entries, and we'll see how the postings would happen in the respective ledger accounts. Okay, so what are the ledger accounts are supposed to be created? One is the salary account and the other one is the bank account. As we have already created the bank account, this 15,000 would get adjusted against the existing balance, and the net balance would get generated in the bank account. Now let's move to the ledger postings phase. See, this 15,000 would get adjusted or would get created in the bank account, because as there will be an outflow of cash, and there will be a salary account which is an expense, it should get debited in the salaries account to bank account, and the debit balance would get carry forward, right? So there will be a debit balance in the salary account. Now we will see how these balances would get reflected or reported, or required to be updated in the trial balance. Salaries, you see, we have updated the in the debit side of the trial balance, we have updated this salaries account of an amount of 15,000, and in the bank account, the salaries, whatever the amount which has been paid towards the salaries is already got adjusted, and the net balance is getting reflected over here. That the amounts which are being shown under the debit side in the trial balance should matches up with the amounts which are being shown under the credit side in the trial balance, because as we have been following double entry system of bookkeeping, there shouldn't be any discrepancy between debits and credits. The amount should get matches up. Now let's move to the last phase of the financial statement, which is a financial statement, and try to understand how this salary should get reported or reflected in the financial statements. Okay, as the salary being an, see, the salary is being paid to the administrative staff. So due to that reason, this will not be part of the cost of goods sold. This would be part of cost of sales. So due to that reason, we would be updating this particular amount after the gross profit. Okay, so 15,000 would get reported under the income statement, under the expense in the income statement, and this bank account has already been adjusted with this amount, and the adjusted amount would get reported or reflected under current assets in the asset side of the balance sheet. The debit side, which is shown, the amounts which are being shown under the asset side, the total balances which are shown under the asset side should get matches up with the total amounts or balances which are shown under liabilities side. There shouldn't be any differences between these, between assets versus liabilities. Okay, now let's move to the next business transaction, which is, what is the next business transaction? Office rent of 20,000 is payable to landlord by 5th of May 2024. Okay, so this RSK and Co has been preparing the financial statements for the period 1st of 1st of April 2024 to 30th of April 2024. Okay. However, the rent has been paid on 5th of May, which means the rent is incurred but which is yet to be paid. So there is a concept of accrued expense would get arises. The rent has been incurred but which is yet to be paid. Okay. So what is the rent amount? 20,000 is the rent amount. So this rent is supposed to be shown under accrued rent. Will not credit the bank account because the expense has been, the rent has been incurred for that particular reporting or accounting period. However, which is yet to be paid to the landlord. So due to that reason, we have been crediting against accrued rent account. Now let's move to the next phase, which is the ledger postings are created. Ledger accounts creation phase, and try to understand how this what are the accounts which are supposed to be created for this business transaction, and see and ensure that the entries should get posted in the respective ledger accounts. Okay, so which accounts which we are supposed to be created? Rent account, one is a rent account and the other one is a accrued rent account. Now let's move to the ledger postings phase. See, rent account. So to in rent account we have debited to rent accrued rent account. In accrued rent account we have credited to rent account by rent account, and the balances are being carried forward. Okay. Now let's move to the trial balance phase and try see whether how these balances for this particular entry is supposed to be updated in the trial balance. Being the rent account is an expense account, it should be debited in the trial balance. Okay, and accrued account being the liability account, it is supposed to be created in the trial balance. All these balances we directly take from the ledger postings or creation phase. Okay, so whatever the balances which are being reflected against the respective ledger accounts, we will directly take the balances from the respective ledger accounts and we will update this trial balance. Okay, the trial balance should get matches up, because as we have been following the double entry system of bookkeeping, there shouldn't be any differences between amounts which are being shown under debit side and the amounts which are being shown under the credit side. Okay, now let's move to the financial statement phase and try to understand how this accrued rent is supposed to be reflected in the financial statements. This rent we directly debit under expense as an expense in the income statement. Okay, and this accrued rent account we would be showing under current liabilities. See, if you see here, we have been showing this accrued rent account under current liabilities, under the liability side of the balance sheet. The balance sheet should get matches up. There shouldn't be any discrepancy between assets, the total balances which are shown under assets versus the total balances which are shown under the liabilities side. The amount should get matches up. Hope this is clear. Now let's move to the next business transaction. See, bought machinery worth 1 lakh, having an useful life of 10 years with a salvage value of 10,000. Okay, an amount of 15,000 paid towards installation of machinery. Company adopts SLM to provide depreciation, and the same would be provided on monthly basis proportionately. Okay, so there are multiple transactions are there as part of this business transaction. One is purchasing of the machinery, and there is some installation cost has been incurred Even to compute the historical cost or acquisition cost of the machinery, we need to add the installation cost which has been incurred to install that machinery in order to get the accurate historical cost or acquisition cost of the machinery. So machinery is valued at historical cost, the cost at which it is acquired. So in the actual cost of the acquisition, it includes the purchase price of the machinery plus any acquisition cost has been paid out for installing the machinery. So to acquire the machinery, we have incurred 1 lakh, and on top of it, even we have paid 15,000 towards installation of machinery. Okay. Now let's see. So the machinery we would be that is RSK and Co would be receiving this machinery. In this RSK would be paying the cost of the machinery in terms of the bank. Okay. If you take a look here, actual the amount which has been paid to acquire the machinery is 1 lakh, and the amount which has been paid towards installation is 15,000. So the total amount which has been shown against the machinery is 1,15,000. Okay, I have updated the consolidated or lump sum amount. Let me give the breakup. 1 lakh plus 15,000. Okay. Now let's move to the next phase, which is the ledger postings phase, and try to understand how these entries should get reported or posted in the respective ledger accounts. So which accounts which are supposed to be created? One is the machinery account and the other one is the bank account. The bank account we have already created, so this balance would get adjusted against the existing balance. Okay. Now let's move to the ledger postings phase. See, by machinery account, okay, 1,15,000 got adjusted against the existing balance in the bank account, and the other one is the machinery account. As machinery being an asset, we would be debiting the machinery account to bank account 1,15,000, and we are carry forwarding the balance, closing the balance of the machinery account. So this amount we will show directly in the balance sheet. Okay. Now we will see how these balances are required to be updated in the trial balance. Okay. As mentioned, the amount which has been paid towards the purchase of the machinery already got adjusted. So we would be showing the net balance of the bank account in the trial balance, and the machinery value of the machinery we would be showing as 1,15,000. Okay. Now let's move to the financial statements and see how this is required to be shown. Okay. See the bank account. We have been showing the bank account as 3,40,000 because we have been directly taking these balances from trial balance, and the value of the machinery we have been showing 1,15,000. There is one more adjustment which we are supposed to be made, which is related to the accumulated depreciation on machinery account. Till now I have covered only one part of that business transaction. There is one more part related to the accumulated depreciation which I will go through now. Now let's move to the same business transaction, and I'll explain you how this depreciation is supposed to be computed. Okay. See, it is clearly stated that company adopts a straight line method to provide depreciation, and the same would be provided on monthly basis proportionately. Okay. So what is the value of the, so what is the useful life of the machinery? 10 years. What is the salvage value? Which is 10,000. Okay. So what is the total cost of the machinery? 1,15,000. So 1,15,000 minus 10,000 divided by 120 months. Okay. Got it? See, if you see here, what is the depreciation for 1 month? My total cost or historical cost or acquisition cost of the machinery is 1,15,000. Of which, what is the salvage value which is going to get generated when the machinery has been sold out after 10 years? In the 10th year, which is 10,000. So the ABC company is going to get generated. So the net book value of the machinery in the 10th year is 9 lakh, sorry, 1 lakh 5,000 divided by 120 months, because the useful life of the machinery is 10 years. So if we want to compute, if we want to understand the depreciation per month, we should divide by 120. Thereby we will get the depreciation per month. Okay. So the depreciation per month would be 875. Okay. I hope you are clear. So what would be the entry? We will not directly hit this 875 against the asset account, despite of which we would be creating the accumulated depreciation on machinery account, which is a contra account, and we will adjust or reduce the balance against this account directly against the cost of the asset. Okay, hope this is clear. Now let's move to the third phase of an accounting cycle, which is a ledger creation or postings phase. So which accounts which we are supposed to be created? One is depreciation on machinery account, and the other one is the accumulated depreciation on machinery account. Depreciation on machinery account. See, machinery account, right? First one is the machinery account. I have already explained you. Depreciation on machinery account. Two accumulated depreciation account, 875, and whatever the balance is there, that needs to be carried forward. And the other one is the accumulated depreciation account by depreciation on machinery account, and this needs to be closed out carrying this, carrying forward, that is we are carrying forward the balance in this account directly to the accumulated depreciation on machinery account. Okay, hope this is clear. Now let's move to the trial balance phase. So, and we'll try to understand how the balances are required to be updated for this particular business transaction. This depreciation on machinery account. See, depreciation on machinery account 875, accumulated depreciation on machinery account. We are creating 875 in the trial balance. The trial balance should get matches up, because there shouldn't be any difference between debits and credits, as we have been following double entry system of bookkeeping. Okay, now let's move to the last phase of an accounting cycle, and try to understand how these are supposed to be reflected for this particular business transaction. Okay, depreciation on machinery 875, and we are adjusting this accumulated depreciation on machinery from the acquisition cost or historical cost of the machinery, and we are showing the net book value of machinery over here. Okay, the balance sheet, that is the values which are being shown under the asset side, should get matches up with the values which are being shown under the liabilities side. There shouldn't be any discrepancies, and you can see that values are matches up. Okay, hope this is clear. Now let's move to the next business transaction. Electricity bill charges paid amount, electricity bill charges amounting to 5,000 payable by 10th of May 2024. Okay, for which reporting period we have been, this RSK and Co has been preparing their financial statements. This is for the period 1st April 2024 to 30th April 2024. However, this particular charge, this RSK and Co has been paying latest by 10th of May, which means the electricity charges are being incurred but which is not yet been paid for that particular reporting period. So in such a situation, the concept of accrual would get arises, right? See, in which situations this concept of accrual would get arises, all those details I had already shared in my video on accrued expenses, and which is already available, which is available in my channel. Okay, I request the viewers to go through that video in order to gain better understanding of this particular journal entry. Okay. So as it is being charged, which falls under the nominal account, the golden rule would be debit all expenses on losses. Okay. So we would be debiting electricity bill charges account at R2, as there will not be any outflow of cash for now, because the amount would be paid by 10th of May, which means in the following month. That is, the expenses are being incurred, but which would be paid in the following month by 10th of May. Okay. So due to that reason, we have been creating to accrued electricity bill charges. Okay. Now let's move to the next phase, which is a ledger postings or creation phase, and we will see the, that is, the electricity bill charges account and accrued electricity bill charges account are being created, and the entries are being posted in the respective ledger accounts. Okay. Now let's see electricity bill charges. So here if you see, to accrued electricity bill charges 5,000, and the balance has been carried forward, and accrued electricity bill charges by electricity bill charges account. Okay, and the balance has been carried forward. Now let's move to the trial balance phase. Okay, what is this all about? Ensure that the balances which are being reflected or appearing in the ledger accounts are required to be updated in the trial balance. So the balances for electricity bill charges and accrued electricity bill charges are required to be updated in the trial balance. Okay. See here, electricity bill charges 5,000, accrued electricity bill charges 5,000. Okay. And the trial balance should get matches up, because as we have been following double entry system of bookkeeping, there shouldn't be any discrepancy. Okay. Now let's move to the last phase, which is financial statement phase, and try to understand how this particular business transaction is supposed to be reflected in the financial statement. This electricity bill charges being an expense, it should be debited as an expense in the income statement. Okay. This electricity bill charges are being incurred, but we are yet to be paid. So due to that, we have been showing as a current liability under the current liabilities in liability side of the balance sheet. Okay. See, the total balance which is being shown under the asset side should get matches up with the amounts or total balances which are being shown under the liability side of the balance sheet. There shouldn't be any discrepancy. Okay. Right. Now let's move to the next business transaction. Paid advertisement expenses of 7,000. This is something expense incurred during the particular reporting period, which I had already explained similar kind of transactions earlier. Okay, this is just an expense incurred. Okay, so advertisement expenses accounted are to bank account. So which accounts are supposed to be created? One is the advertisement expense account and the other one is the bank account. The bank account already exists, so the 7,000 would get adjusted against the existing balances of the bank account, and the net balance would get reflected in the respective ledger account. Okay. Now we need to create the advertisement expense account. Let's move to the ledger postings phase. If you take a look here, here it's an advertisement expense account, two bank account 7,000, and in the bank account we are creating the bank account. We need to adjust the bank account, right? Because it is an expense, so we need to adjust our bank account to the extent of that amount. So we are reducing our bank account. What is the net balance? Which is 333,000. Now let's see how these balances are getting reflected, are required to be updated in the trial balance. See, 333,000 adjusted bank account balance and my advertisement expense account. Okay, the trial balance should get matches up, because as we have been following double entry, there will not be any discrepancy between debits versus credits. Now let's move to the financial statement and try to understand how these are supposed to be shown or reflected in the financial statements. Advertisement expense being an expense, it should be shown under the expense side in the income statement. Okay, as it's already been paid out, this amount already got adjusted against the bank account. Okay, the balance sheet should get matches up. There shouldn't be any discrepancy between the balances which are shown under the asset side and the balances which are shown under the liability side. The amount should get matches up. Okay, got it. Hope this is clear. Now let's move to the next business transaction. Paid 12,000 towards half yearly insurance expense on the health of the employees, which means the organization has been paying insurance on the health of the employees. Normally, insurance would cover only if the amount has been paid in advance, right? So whatever the amount which has been paid, that amount has been paying in advance by the organization, which is a half yearly insurance, which means this 12,000 is pertaining to half year. Now we need to compute what is the insurance per month, which is 2,000, right? However, that is amortization that we will discuss later. Okay, now we would be paying the total 12,000 towards insurance, right? Okay, see, prepaid, because it is something related to the insurance which covers for a period of 6 months, right? So this is something related to the future period, current plus future period, so it includes even the expense pertaining to the future period. So we need to debit to the prepaid insurance expense account. Okay, and the credit needs to be given to the bank account, because the amount, there is an outflow of cash, so due to that reason we are creating bank account. Okay, now let's move to the ledger postings phase and see whether these accounts are being created and the entries are being posted or not. Okay, prepaid insurance, prepaid insurance account, prepaid insurance. Okay, in prepaid insurance, two bank account 12,000. In insurance, okay, in prepaid insurance we are done, right? So two bank account 12,000. In bank account we will check. See, 12,000 got created or adjusted, got created in bank account. Okay, now in trial balance, this bank account, what is the balance in bank account? 3,21,000. Okay, we are showing 3,21,000, and even we have expensed this insurance for the current month. So due to that reason, we have adjusted our insurance, prepaid insurance, to the extent of the expense pertaining to the current month. Okay, got it. See, if you take a look here, My prepaid actually my prepaid insurance amount is 12,000, of which 2,000 pertaining to the current month insurance. So due to that reason, I am adjusting my prepaid insurance to the extent of 2,000, and the balance which is lying in the prepaid insurance would be 10,000 only, right? The 2,000, whatever the amount which has been adjusted against the prepaid insurance, needs to be expensed, right? So insurance expense account, okay, to prepaid insurance expense, and this we need to carry forward, okay. The same amounts we have shown in the trial balance. See, 10,000, 12,000, and 3,21,000. The trial balance should get matches up because we have been following double entry system of bookkeeping. There will not be any discrepancy between debits versus credits. In the balance sheet, we will see how these are supposed to be reflected or shown. This prepaid insurance is something related to the future period, so we would be treating that as a current asset. So due to that reason, we are showing this 10,000 as a current asset. And this bank account, it's already been adjusted, this whatever the amount which has been paid for the prepaid insurance, and the net balance is getting reflected over here, okay. And this insurance is expense pertaining to the current period has been expensed under the income statement, under the expenses in the income statement, okay. Hope this is clear. Now let's move to the next business transaction. Okay, see, this is the insurance expense which is pertaining to the current period. So as initially we have debited prepaid insurance expense account, and the expense which is pertaining to the current period has been adjusted against the prepaid insurance expense account, okay. Hope this is clear, okay. If you guys have any questions, I request you guys to uh, provide your comments in the comment section, okay. I'm happy to go through and respond to your queries, okay. Yeah. Now let's move to the next business transaction, okay. An amount of 50,000 deposited towards fixed deposit, okay, receiving a monthly interest of 6% per annum. So the first business transaction would be, what is the first business transaction? 50,000 has been deposited, which means this is something like an investment, okay, investment in fixed deposit for RSK and Co, right? And what is the outflow? There will be outflow of bank or cash, okay, right. And once the fixed deposit has been created, normally the interest would get generated, right? How the interest is get generated? What is the rate of the percentage? Receiving a monthly interest of 6% per annum. So per annum the rate of the interest would be 6%, okay. Now we need to compute what is the per month interest. Here I have done it already. I'll just show you. See, if you take a look here, this 50,000 is my deposit. On 50,000, what is the percentage of the interest is supposed to get generated? 6%, okay. And what is the interest per month? Which is 1 by 6. Thus 500 rupees is the interest which is getting generated out of this 50,000, okay. So investment in fixed deposit account that are to bank account, okay. See, I have already created videos on all these concepts in my channel, okay. And I have already shared the video numbers, okay, in business transactions tab. I request the viewers to go through all those videos in order to gain better understanding of these financial statements. And if you guys still have any further queries, I request you guys to put a raise your queries in the comment section. I'm happy to go through those queries and respond to your queries at the earliest possible, okay. Right. Okay, now let's see, okay, let's try to understand what are the accounts which are supposed to be created and ensure these entries are required to be posted in the respective accounts, okay. So which accounts which are supposed to be created? for this journal entries. One is the investment in fixed account and the other one is a bank account and the interest on fixed deposit account. This we have already created the bank account, so we would be adjusting this. We would be posting this 50,000 into the bank account directly, and we would be creating investment in fixed deposit and interest on fixed deposit, and we will post these entries in the into the respective ledger accounts. Let's see. See, investment in fixed deposit, interest on fixed deposit, investment in fixed deposit to bank, and we will carry forward this balance. Interest on fixed deposit, okay, by bank, we will carry forward the balance. Okay, hope this is clear. And regarding this interest on fixed deposit, we would be increasing our bank balance because the RSK and Co would end up in receiving this 500 towards the investment in fixed deposit. So hence we are increasing the bank balance of RSK and Co. Okay, and we need to reduce 50,000 from the bank in the bank account because there is an outflow of 50,000, which is primarily investment in fixed deposit, which I have been showing over here. Okay, got it. Hope this is clear. Okay, now let's move to the trial balance and try to understand whether these are getting reflected over there or not. One is the investment in fixed deposit, which is an, see, we have been showing that investment in fixed deposit and interest on fixed deposit is an income we are creating in the trial balance. Okay, see, and the balance in the bank accounts are already been adjusted and the net balance is getting reflected over here. See here, 2,71,500. We have been showing the same balance over here, 2,71,500. Okay, now let's move to the financial statement and try to understand whether these are being correctly reported or getting reflected, how these are getting reflected, how the balances are getting reflected in the income statement and the balance sheet for this particular business transaction. Okay, see, if you take a look here, interest on fixed deposit is an income for RSK and Co. So due to that reason, we are crediting in the income statement under the income statement. We are creating as an income under the income statement. Okay, and interest in fixed deposit is primarily a fixed asset. Sorry, is a current asset. Okay, so due to that reason, we have been showing over here. Okay, and the balance, that is whatever the bank balance which has been getting reflected in the trial balance, we have been updating the same balance over here because it is a club of various adjustments. It keeps on changes as and when the new entry gets hitted in the bank account. Okay, if you take a look here, the balances which are being shown under the asset side, the total balance which has been shown under the asset side should get matches up the total balance which has been shown under the liability side. There shouldn't be any discrepancy. Okay, hope this is clear. Okay, now let's move to the next business transaction. Okay, what is the next business transaction? Sales. Okay, see here, sales of 5 lakhs made to customer on 15th of April 2024, which is expected to be received by end of the month. 15,000 of finished goods are expected towards returns. Bad debts are expected to be 3% on net sales. See, there is a sales of 5 lakhs has been made to our customers, and the organization or entity has been expecting 15,000 towards returns, and there will be a 3% on net sales, which means out of the total sales, after adjusting the returns, whatever the balance sales would be there, on that balance there is a possibility of or that there is a bad debts of 3% would get arise as a bad debt. Okay. So first entry would be normally, because if you see here, on 15th of April sales has been made, which is expected to be received by end of the month. So it would be initially the credit sales only, which means the sundry debtors are required to be, see, as and when the sales happened on a credit basis, what are the entries, all those details I had already shared. Okay, in the video on sale of goods or services on credit basis, I request the viewers to go through that video, and regarding that one I had already shared the video number as well in the business transactions tab. Okay, now see, 5 lakhs is my total sales. Okay, so sundry debtors account data to sales account. Okay, so now the next entry would be, what is the next entry? There will be a returns would be there, right? 15,000 are the returns, right? When the sales are being made, we are debiting the sundry debtors and creating the sales account. When the returns are being made, normally it would be reversal of the actual sales, right? So we are reversing out our sales and adjusting our sundry debtors to the extent of the amount or inventory which has been returned by our customers, right? This is the second transaction, second journal entry, which would get arises out of this particular transaction. And the third transaction would be, and the third transaction would be bad debts. It is clearly been stated the bad debt would be 3% on net sales, right? So net sales means from the total sales we need to adjust our returns, and whatever the balance would be there, we will call it as a net sales. On that net sales the bad debts would be 3%, right? See, if you take a look, I am considering my total sales from which I am adjusting my returns. Whatever the balance would be there on that one, I am computing 3%. So my bad debt would be 14,550. Okay. So when the bad debts get arises, this is not a provision actually. This is an actual bad debt. So due to that reason, I am directly adjusting my sundry debtors. It is a real bad debt which has been arised in the same reporting period. This is not a provision. If something is related to a provision, then the entries would be in a different way. We cannot directly adjust our sundry debtors. We need to create the provision, and as and when the actual bad debts get arises, we need to adjust the provision. Okay, then only we will directly adjust our sundry debtors. Now in this case, as the actual bad debts are arise, so due to that reason we are directly adjusting our sundry debtors. Now what is the balance amount? See, if you see here, this is my total sales, this is my returns, and this is my bad debt. Okay, so we need to adjust all these numbers, right? So from the total sales we need to reduce our returns, and from the net sales we need to reduce our bad debts, and this is the amount which the entity is expected to be received by end of the month from our customers. So bank account debtor to sundry debtors account. Hope this is clear. Okay guys, go through this transaction. Okay, if you still have any further queries, let me know. I'm happy to clarify you. Just raise your concerns in the comment section. I'm happy to go through those comments and try to clarify your queries at the earliest possible. Okay, now what are the accounts which are supposed to be created as part of the ledger posting phase? We need to create sundry debtors account, sales account, bad debts account, right? These three accounts we are supposed to create. Let's see. Here, sundry debtors account 5 lakhs, sales account 5 lakhs, bad debts account. Bad debts is an expense, right? So we are directly debiting to the bad debts account 14,550, and whatever the balance is there, we are carry forwarding that balance. Okay. Now, what about this first? For first entry, 5 lakhs, we need to debit our sundry debtors and credit our sales. 5 lakhs, 5 lakhs. Okay. And for the second entry, we need to reduce our sales and reduce our sundry debtors to the extent of 15,000. See, we are reducing our sales, sundry debtors, and we are reducing our sales to the extent of 15,000. And what is the third entry? Bad debts, right? We need to show the bad debts, and we need to adjust our sundry debtors. See, 14,550 we are adjusting to the extent of the bad debts in sundry debtors, and in the bad debts we are showing it as an expense to sundry debtors 14,550, and whatever the balance is there, which we have been carry forwarding in that account, right? Okay, hope this is clear. Now the last entry would be collecting the amount, net amount from our customers, which is bank account debtor to sundry debtors account 470 450. See here, sundry debtors from sundry debtors we have been collecting bank account 470 450, and in the bank account to sundry debtors 470 450. The balance in the bank account is 741 950. Okay. Now let's see. So the balances are been correctly updated in the trial balance or not for these, all these ledger accounts or not. Okay. Say sales 4,85,000. Sales how much? Sales 4,85,000. Bad debts 14,550, which is an expense, right? 14,550. Okay. And the bank account would directly adjusted with the amount which has been collected. So after adjusting all those amounts, the balance in the bank account is 7,41,950. See here, 7,41,950. Okay, hope this is clear, guys. Okay, the amounts which are being shown on the debit side in the trial balance should matches up with the amounts which are being shown, or totals which are being shown under the credit side of the trial balance. Because we have been following, as we have been following double entry system of bookkeeping, there shouldn't be any discrepancy. Okay, the debit should get matches up with the credits. Now let's move to the financial statements and try to understand whether how these things, how this in that is the balances are supposed to get reflected in the financial statements. Sales 4,85,000. Okay, sales 4,85,000. And bad debts 14,550. 14,550. Okay, and bank account 7,41,950. 7,41,950. Okay, hope this is clear, guys. Okay. Now my trial balance, which means sorry, my balance sheet, the amounts which are been shown under the asset side should matches up with the amounts, the total balances which are shown under the liabilities side. There shouldn't be any discrepancy. Okay, because we have been directly taking these balances from the trial balance, there shouldn't be any discrepancy. Okay, guys, if you take a look, okay, this entire financial statements I have explained end to end, guys. Okay, I have taken the business transaction. From the business transaction I have created the journal entries. From the journal entries I have created the ledger accounts, and the entries or the journal entries are being posted in the respective ledger accounts, and from the ledger accounts I have identified, I have carry forwarded the ledger balances, and I have taken those ledger balances and the same are being updated in the trial balance, and I have taken the balances which are being updated in the trial balance, and the same are being shown or reported in the financial statements, which are income statement and the balance sheet, guys. Okay, so if you take a look here, my gross profit is 2,65,000 after adjusting this these amounts, and my net profit is 2,01,075. As you know, guys, okay, this net profit, whatever the net profit is there, that will directly go to the owner's equity. This net profit is something related to the owners who are basically shareholders. So due to that reason, I am directly moving that number to the return earnings, okay, in the balance sheet. And my equity would be 7 lakh 1075. My total balance under the liability side is 9 lakh 1675, 9 lakh 16,075, which matches up with the balance which has been shown under the asset side in the balance sheet, guys. Hope this is clear, guys. Okay, I request, guys, before getting into the details of this entire financial statement, I request you guys to go through the videos which are being created on the various concepts of the journal entries, and the same are already exist, are being posted in my channel, guys. Request you to go through those videos before getting into these financial statements to gain better understanding of these financial statements. Okay, so guys, similarly, in the similar way, you guys just try to understand each and every transaction considering this accounting cycle, and try to simplify the things, thereby that would be helpful for you in terms of understanding the concepts in an easiest way. Okay, so now let's move to the PPT. I am done with this slide, guys. Okay, now let's move to the last slide. Hope you guys like this video, guys. If you guys really like it, request you to like this video, share it to your friends, and subscribe my channel for more videos, guys. And also I request, if you guys have any questions regarding the concept or anything which has been explained in this video or any of the videos which are been posted in my channel, okay, request you to provide or raise the queries in the comment section. I'm happy to go through those queries and happy to clarify at the earliest possible, guys. Okay, thank you, guys. Thanks for watching. Catch you in the next video.